The S&P is within striking distance of all-time highs, and the Fed is on deck tomorrow. Will the Fed push the market to records? Jim Awad, Clearstead Advisors, Senior Managing Director, joining us now to discuss. So you think the markets right now are kind of constrained by uncertainty, and it's coming at it from all different angles. Will some of that uncertainty be taken away tomorrow?
No, I hope not. What I would counsel to the Fed is to leave all their options open, maybe take the word patient out. People have been speculating. The dot plots can reflect what their new assessment of the economy, which probably is lower growth for longer and lower inflation for longer. But I think two reasons not to do it tomorrow is A, they would lose credibility vis-a-vis Trump's pressure on them to lower rates. And secondly, they really need to have ammunition for the next downturn. And there's no reason to give that away. It's not so clear that the domestic economy is so weak that it needs a rate cut at this point. It can't tolerate a rate increase, but I think they can get away with doing nothing, emphasizing flexibility and waiting to see what happens over the next few months, waiting to see what happens in China with the meeting, waiting to see what happens with international rates, which are being pulled down. They have another shot at it next month. I think it would be a mistake to do it tomorrow.
Now, the political pressure, though, is probably not going to be going away, right? I mean, I guess the question now is if the Fed cutting at any point appears to have been pressured by Trump, would there be that big of a difference between doing it tomorrow versus July or September? Well,
you know, every month that they go along and don't follow his wishes, they add a little bit to their credibility. And were there to be bad news in the next month, well, that would give them more reason that they could do it with legitimacy and not losing their political independence. They have nothing to lose by waiting a month, and I think something to lose by moving tomorrow. Now, with that, I'll feel like a fool if they do it tomorrow, but that would be my recommendation to them.
You know, Jim, getting outside the daily headlines a bit, I'm thinking in the back half of the year, low rates are likely here to stay. You have a lot of cash on the sidelines. How likely is Dow 30K by the middle of 2020?
Well, if we don't have a self-inflicted wound, which means they have their meeting next week and it breaks like the Korean summit, or there's a war with Iran, if there's no geopolitical event, the runway here is not bad. You have the stimulus from lower rates. You have a reasonable economy. Parts of it are softening, but it looks like it's going to continue to grow. In fact, recent estimates have come up, which should allow for growing corporate profits, and if rates come down, you could get higher.
Not that far away.
Yeah, so I think we could make new highs, and I think the window would be when corporations in July and August report second quarter earnings and give third quarter outlook. If there has been a little bit of progress on the trade front, which will allow businesses to then plan and spend and realign their supply routes with certainty, not being disruptive, I think we could have a good runway going into the end of the year and early 2020, and of course, then we get into election season, and a lot of things can happen. You can have a lot of rhetoric, but I think we can make a new high somewhere in the 6 months between July 30th and the end of the year, if there are no external wounds or surprise events that come out of nowhere. It would be a real negative if the two leaders met next week and it blew up, like the Korean thing blew up. I think that would be a real disappointment because businesses then couldn't plan and would pull back, and it would be slower growth and higher tariff-imposed inflation, which would not be positive for the markets.
But if what you're positing works out, what sectors do you think people should be looking at?
Well, it is late in the cycle. So those who are saying do late cycle stocks because they've underperformed, I don't buy it. I don't think we're in a period, we're not going to accelerate growth from here. If we grow, it's going to be at lower rates than we've been growing. So I think you go with secular growth companies, but I don't know how to value some of the new ones, like, you know, the
Beyond Meat?
Yeah, that would be a perfect example in some of these new issues. But you do have technology and healthcare companies that are unit growth companies satisfying long-term demand in the economy, some of them selling at sensible prices. So I would say the growth at a reasonable price sector with an emphasis on healthcare and technology would be where I would emphasize, and I would de-emphasize cyclicals and commodities and everything that you need when you're going into an acceleration of growth.
All right, Jim Awad, thank you so much. Clearstead Advisors, Senior Managing Director. Have a good Fed day tomorrow.
Thank you.
You too, Brian Sazzi.
Dow 30K, you heard it first in the final round.